I have to touch this last low, all right, before the highest point. Have a look at the market. Watch. Indication. Now we're waiting for a close below that low over here. Looks like a close over here to me, below this low. All right, close. Then therefore we're waiting for a correction. Have a look at the correction. We're waiting for a continuation. Now, if you wanted to, have a look at your entry. Every time, that would be your entry. Your stop would be above the last high, yeah? Or if you wanted to be safe, you could go all the way above this swing high. It's completely down to you. We're gonna go here, all right? And have a look now. Our 1 to 4 trade that we took turns magically, as if by magic. It turns, depending on how long you want to stay in the trade. Like the reality is, would you stay in there for the whole move all the way down? No, but that's a 1 to 12 down to this low. If you fell asleep, yeah, you just, I don't know, was comatose for a few days, and then you woke up and said, oh, I forgot my trade, my DAX trade. Well, that's a 1 to 40 trade, life-changing trade. All right. Now, why is it that the case that we're able to catch these trades in this way? Simply because we have our strategy and we stick to our strategy. Let me say that one more time. Why is it that we can catch 1 to 12 trades or go to sleep and catch 1 to 40 trades? Because we follow our strategy and we stick to our strategy. Let me tell you something. This is me talking for myself, the people that I speak to. You start freestyling. You start doing your own thing. Oh yeah, I'm just gonna hit the button when I see a wick that goes into my area. Or I'm just gonna not trade with a stop loss. Or I'm just gonna do something else. You will feel it. Because you're just doing some next stuff. It's like, I don't know how to explain it to people when I hear them doing a madness. It's just like, this is how you swim. When you go under the water, you hold your breath. If you decide that you're not on that, yeah, you're not on holding your breath under the water, and you go under the water and try and take a deep breath, you're gonna be in trouble. It just doesn't go like that. I know you wanted to do your own thing because you're a rebel, but if you go under the water and start taking deep breaths, it's gonna be a problem. So I want you to always remember that very strange analogy of you trading and not sticking to your rules. I'm telling you, I'm a swimming instructor. Furthermore, I nearly drowned in my previous life. And I'm saying to you, when you go in the water, hold your breath. If you don't, you will be in trouble. This should prevent you from doing any other type of nonsense apart from sticking to your strategy. Now, you still might drown. This is the thing. You might drown. Maybe you don't know how to kick your legs. Maybe you don't know how to move your arms. Maybe you get eaten by a shark. Who knows? Yeah? But let me tell you something for facts. Those are all possibilities. But for facts, I know if you start trying to breathe underwater, you're going to be in problems. Unless you've got some sort of tank, some sort of breathing apparatus. This is supposed to make you stick to your strategy. Do not tell me that you got in a trade and I'm looking at it, I'm going, where did you get in? And you're saying you got in some up here. I'm like, I can't see it, bro. I can't see why you got in there. I don't care whether the trade went in your way, went in your direction. That is short-sighted. If the trade didn't indicate, didn't correct, didn't close down below, yeah, or if you're advanced, you know how to take it from an earlier position in here when you see the same indication, correction, continuation. But if you don't see it and you didn't get in right here, you got in somewhere else, I do not care if your trade went into profits and you made money hand over fist, because it is not something that you can replicate. You're just doing anything. You're a weirdo. So it is your only job as a trader is to execute on your edge, on your strategy. And then over time, God willing, if there's not madness happening in the world that's completely throwing technical analysis straight out the window, you will win more times than you lose, and you will definitely be profitable if you know how to manage your risk. This is trading, nothing else. Nothing else. Let's go and look at what's happening right now. I did say 20 minutes. I think we've got probably 4 minutes. Let's have a quick look. Let's have a quick look over here. 3 minutes. All right, so we're getting some red folded Euro news in 3 minutes. So I'm looking at, I think we're going to split screen. We're going to split the screen real quick. I'm actually going to split the screen with 2 physical screens. I'm not going to split it with their tool. I'm going to do this. I'm going to do this. No, I'm not doing that. I'm going to duplicate this screen. I've got 2 minutes now. Let's see if I can do it quickly. I'm going to snap one of these screens over here. And I'm going to snap the other one over here. I'm going to make this one over here Euro USD. All right, which I think might not show us as much movement as we think. And the other one we're going to have the DAX, which is the JER 30. All right, and we're going to go down to a small time. I really should have marked it up first, to be fair. I do think we might see a bullish push if I can remember correctly, but let's see. Remember, today, like I said, is non-farm payroll, all right, which is going to make things get hectic, electric. It's going to make things start moving, okay? But for now, we've got 1 minute left, seconds. Let's see if we can see any reaction to unemployment rate news happening right now. It might not, because we've got some JER news and we've got some, so this is mostly Italian news, but we've got some GDP news and some Euro news in an hour or so. So we might not see too much happen, but let's just see. Let's watch. We've got about 50 seconds. No, I'm lying. We've got a minute and a bit left. Okay, by my clock anyway. All right, we have a minute and a bit left. I don't think too much is going to happen, not before we see the other news happen in an hour, personally. All right, but who knows? Which one should I look at? I said I didn't really like JER 30. It was kind of in the middle of a range. No, so I didn't really like Euro USD. It's kind of in the middle of a range. Let's have a quick look at JER 30. All right. So, looking at this JER 30, okay, over here, we're going to zoom all the way out. Remind me in a minute to just have a quick glimpse. I actually don't think too much is going to happen, but who knows, all right? So, this is where we are in our JER 30, and I'm saying I don't really like the fact of where we are. Yeah, we are near middle to high, yeah, on the range, but we kind of don't really like this whole middle space. This whole middle space to me is a bit, yeah, it's a bit leaving. I'm not talking about this middle space, I'm talking about this whole area here. It's all a bit, it's a bit, you know, I want to take buys or sells from outside of that area for us to try and squeeze it down a bit. Yeah, now don't get twisted. There's still great opportunities within there, you know. But from here, we're at the top of this range. I'm thinking to myself that maybe this could happen. All right, let me highlight it in green. Maybe this is highly probable of occurring. All right, let's zoom in and see whether or not there's any type of inclination. We've got seconds left. 9 o'clock's just here. That news is just coming out right now. Let's drop our time frame down to a minute. Let's have a little look, see if anything's going to happen. I think too much will. All right. Don't think too much will happen. Might see a little volatility coming into the market a little bit. You know, that news is just hit 21 seconds ago. They're waiting for the results. Have a look. If I pull this out over here. Waiting for the results. The results are loading. Can you see? And I don't think too much is going to happen. The results are loading for this red folder news here. That's just come out, which is European unemployment rate. It's got the Italian flag there. Maybe it's predominantly for Italy. I don't know. Then we've got GBP news in 29 minutes. I think more say this news here may move the markets in 59 minutes. Yeah, by 10 o'clock. Have a look. Let me refresh this. They thought previously it was 7.5%. They think it's going to be 7.5%. This is the consensus. Look, this is the previous number. This is the consensus number. So they think it's going to stay the same. And we still haven't got the actual number yet as the news is being released and coming in. Okay. Now, personally, like I said to you, this JER 30, I'm not going over the moon for it. I don't love it. Yeah, it's not giving me pure love. Yeah, DAX slightly higher ahead of US jobs data. All right, that's some information just coming from TradingView, giving us some news. I don't really take that stuff don't make too many decisions based upon that information. Here you go. Look, they said it came out slightly better than expected, 7.2%. And like I said, I don't think that's for Italy. Even though it was Euro, it was Italy. So I don't think that's really going to be the news that's going to move too much stuff. I think maybe we're going to be waiting for this news here at 10 o'clock. So if you're in a trade, you're looking at things at 10 o'clock, 10 a.m., this is where we might see some volatility. All right. Let me go look at something else, guys. I don't like any of these Euro pairs, and I don't even like the US pairs at the moment. Look at GBP USD. Also, because today is non-farm payroll. And what you find with non-farm payroll is the markets will do jack squat, be very volatile, just going and backward, just jittery, backwards and forwards, all in here. Okay, until non-farm payroll information comes out, and that is going to be coming out later on today at what time? 1:30. So 1:30, between 1:30 and 2:30, we're going to see it. That's maybe the time after 1:30 to be able to see what's going on and maybe get active. But prior to that, the markets are just going to just wait and see Wagwan. Okay. Now, what I did say we're going to do is we're going to quickly go back and look at previous non-farm payrolls and what kind of effects that they had on the market. So how do we know when the previous ones were? Have a look. It's really easy. We go into our My Forex book. We can click on non-farm payroll here, okay? And we can see history. And guess what? The history gives us the exact date and exact time of previous non-farm payroll. So let's, for argument's sake, go mark out two of them. We're going to mark out March and April. So March the 8th and April the 5th. Okay. March the 8th and April the 5th. So we're going to go into our chart. And we're going to go back to March the 8th. March. Look how easy this is. Oops. In fact, this is all backwards. So it's the 8th. March. And I think, if I remember correctly, it was 1:30. I'm not sure. Let me check. Let me check the check. It's got no, obviously I'm on 1 minute, so I don't need to know 1 minute. Let's say 5 minutes. Let's go over here and check the check. Here we are, 8th of March at 1:30. Let's just check to see if it was 1:30 or 2:30. 1:30. I'm going to mark a little line on that chart. The next one is April the 5th. Sorry, March the 8th at 2:30. This should be 2:30, and then April the 5th at 1:30. So this one should be 2:30. Should be 2:30. And this is GE we're looking at. And I'm going to mark a vertical line here. Sorry. At 2:30. Kind of around here. And the other one was April the 5th at 1:30. All right. So let's go over here. We'll just go April 5th at 1:30. So we can see some substantial volatility that flew in the market at both of those times. All right, zoom out. Those two white lines I was putting in, make them different colors. They're a bit ambiguous at that color. Let's make them bright yellow. Brighten up. All right. So both of those points there are non-farm payroll. All right. So let's go to one of them. Just click this one. This is the last one that I'm mapped to my calendar. All right, which is Friday the 5th April at 1:30 approximately. And let's go and have a look and see what happened. I'm all the way down to my 5-minute time frame. Let's go back to that time. Chalet. Yeah, let's have a look. Let's go like this. Let's go again. Let's go to our 1-minute time frame so you can get even more further detail. Let's hit that button again. No, it's not giving me the information. No problem. So here. All right, let's go here. Have a look at non-farm payroll. Pow. Yeah. Pow. In one 5-minute candle, we got a quick 60 pip move, and in GBP USD, that's a big move. All right, and let's see what happened. Was the news better than expected or worse than expected? Well, actually, if that was the April the 5th one, it was a better than expected result. Yeah, so there was a better than expected result in non-farm payroll, and we saw the US dollar gain strength and GBP USD fall for 60 pips. Let's go and have a look again at that other one that we marked at March the 8th, okay, which was again a better than expected result. And let's see what happened then. So do you see how we don't have to guess? We don't have to guess with this stuff. We can check. The data, the facts are there. We don't have to be out here on, I'm not too sure what would happen if this happens or that. You can just check. If you really care, you just check. Okay? You check. So this is March the... yeah, this is March the 8th at 2:30, and what we can actually see is that there was a little delay. Actually, tell a lie. Yeah, there's a little delay, and then once again we saw a big bearish push. All right, in that market. Prior to it, though, prior to the news coming out at 1:30, look at this volatility. This is the volatility which is the concern. Yeah, the volatility that can be non-farm payroll days is at 1:30. We saw this market go all the way down here, then wick all the way back up to here. A move of another 60 pip move backwards and forwards. This is why some people say they don't want to trade when non-farm payroll is happening, because this could happen. Now, if this happened, whether you was buying or selling, very high probability you got stopped out. Yeah, unless your stop was all the way quay down here, and if it was, then it's not a very big move. Yeah, or somehow you was able to catch it as this wick came down here, which I doubt. This volatility going this direction and then all the way back up in this direction, and then far us and about for a little bit, then going all the way back and down. This is volatility that is a bit national lotto. It's a bit, yeah, you know, maybe not. Maybe we'll catch it, maybe we won't catch it. Yeah, hence, this is the reason now you're seeing with your eyes, based upon facts, not based upon opinion, of why people say non-farm payroll day, you stay away. But where else did you see this kind of mad volatility in this market? I can't see it nowhere. Oops. I can't see it nowhere. Look, I can see the market wicking in one direction for 60 pips and then wicking back in the opposite direction for 60 pips and doing a madness. No, just calm. Calm, nice little candles that we can trade in. If we believe it's going up, it will go up nicely. This madness has only come into play in non-farm payroll. Let's go look at the other one real quick that I marked out, which was the 5th. Go to the 5th, the 5th, I think. April. Yeah? Have a look at this one. Let's try and knuckle into this one. Well, this one we didn't have the whipsaw beforehand. But it looks like to me it's at 1:30 the market gets active. Because at 1:30 is when we saw the whipsaw backwards and forwards before, and at 1:30 is when we saw this big push down, that volatility comes. So obviously I can go and test another 8 times to get 10 different non-farm payroll data. I could do, I don't have the time to do it this morning. But I think at 1:30 we may see some real activity jumping into these markets. Yeah, that activity might be it going up quickly, then it going all the way down quickly, then it going in the opposite direction. Or that might be it just dumping in one direction, who knows? Trade at your own peril. It's down to you if you want to get involved. All right. Remember as well, guys, if your stop loss is too close and the market moves too quickly, you can get slippage, meaning that you wanted it to stop you at 100, but it just went straight past your stop loss and stopped you out for 400. It can happen. Meaning that you only wanted to risk $100 and the market, because it moved so quickly, it jumped within a minute. At 131, it just went boom, jumped straight over your stop loss and stopped you out for something wild. This can happen. Don't say I didn't warn you and you go, Jay, I only risked $100 and it's saying that it took $600. I told you. I warned you. This is why traders stay away, all right? But anyway, I've just shown you how you can backtest information to gather some more, backtest data, backtest and look to see what happened at fundamental pit times in the markets. So you can start, so now you know. Now someone says non-farm payroll and you say, gee, it's like, well, non-farm payroll. But with non-farm payroll around the GU, we normally see some volatility around about 130. And more time out of 10 than that, when the market is better than expected news, the overall market wants to push down bearishly. But prior to that, we can see some volatility. You know that now, kind of. We only tested two. But if you were to do a bigger batch of data, you will know what happens. So by the time I say non-farm payroll to you, you know what I want. Now, guys, if you're trying to take this trading seriously, what I just did wasn't brain surgery. It wasn't difficult. It was just being able to add a little bit more, to gain a little bit more information about what the markets do. It wasn't difficult. We just went and clicked a link. We went and saw what was going on in regards to what time it was, and we went and checked. You could plot this in an Excel spreadsheet if you wanted to. You could say, yeah, this happened, better than expected, blah, blah, blah. Yeah? You could go and plot it. All right, no problem. Anyway, let's get back to the basics. All right, let's get back to the basics. This is Friday, and I'm going to open up the floor for anybody to ask me any questions about the strategy, about trading, about risk management, about what tools to use, about anything to do with anything, about anything, because today is Fix It Fridays. So I'm going to give you a moment to ask me some questions. And don't tell me you ain't got no questions. You must have some questions. So let's go. Ask me some questions. Someone's got a question for me. Someone's got some sort of question that they'd be able to come and use in these markets to change their life. Somebody has. No questions. Okay, it's good. Means that everyone knows everything. Everyone's good with everything. Good. All right. I'd be asking the socks. I'd be asking about everything. Do I take market execution? What about limit orders? What about buy stop orders? Stop limit orders. I mean, what about this? What about that? How do you get out of a trade, Jay? Because when I get in a trade is one thing. How do I get out of that trade safely is another thing. I'll be trying to get as much information as possible to make me a better trader. Now let's have a look here. For example, we're in the GU and this market was trading within this range. Okay, so it came up to here. So it pushed here. This is the swing low, this is the swing high. The market's trading within that range. We've seen a little push up bullishly at the moment. The market's still making higher highs, higher lows. We've just seen a little higher high 5-minute close above that level. Okay. Now maybe what this market's going to do is continue just pushing up in here. Maybe. Yeah. Maybe it might just keep pushing up in here until we get some non-farm payroll news, and then maybe it decides to do that. Yeah. Maybe. I don't know, but what I do know is we've seen by 1:30 today, there's going to be some volatility, and that volatility you're thinking, yeah, that might go in my direction. It might do. It might just go directly in one direction, and you might take a gamble, and you're in there the right way, but it also might do this. And if it does that, you're going to get stopped up. And it's very, very possible if it does that too quickly, and your stop loss is too close, you're going to get slippage. So you're not going to get stopped up for the amount you want to get stopped up for. You're going to unfortunately get stopped up for more. All right. So the safest thing, if I was a parent and I was trying to keep my children safe, I'd say to you, prior to 130, unless you're substantially in profits in your position and your stop loss is far away, very far away, to the tune of at least 50, 30 pips away, I'd say. I was going to say 60. But we've seen that 60 pips worth of volatility in our back testing. I'd say close your trade. Close your trade, see what happens after the news comes out, after non-farm payroll. And if you really want to, you can start trading again. That's the responsible thing. Okay. If there's no more questions, like I said to you, what I can do here is I'm going to go and I'm going to find a blank piece of screen, okay? And I'm going to ask you some questions, because maybe I know it's a little bit daunting. You don't want to just ask a question. I'm going to ask you some questions right here, and I want you to give me the answers based upon our strategy, all right? So, it's going to look like this. You ready? It's going to look like this. And I am making this up as I go along, so bear with me, all right? It's going to look like this. And the market is looking like this. This is what the market is looking like. The market is looking like, and I'm going to ask some questions. Oh, M's got her hands up. Yes, let's go, M. Let's go, M.
Thank you. I'm just wondering, do you like to trade on the bank holidays? What do you feel about trading on a British bank holiday?
Well, the whole thing, I'd say, very good question, is, by the way, when is it bank holiday? Is it Monday?
Yeah, Monday. There's 2 in May. Monday and then there's one at the end.
Okay, thank you for telling me. I just wouldn't know. All right. If you're trading a British pair in a British bank holiday, then I'd say that you're not expecting for a lot of things to happen. But it depends, isn't it? You can if you look. The bottom line is this. This is my answer to everything. I trade what I see. If I go in the Great Britain, if I open up GU, for example, it's a British bank holiday, but America's open and they're getting active. And if I could see some stuff, the market's moving and my strategy playing out, then I may trade it. Now, if I can see the markets are not moving, because I'm equipped with the knowledge that today is a bank holiday, I'm going to be like, oh, it's a bank holiday today. That's why the market's not moving. Okay, I'm not getting involved. Because I'd like to trade when they've got some volatility for me to be able to actually catch a move sometime this century. I don't want to be sitting around whilst the market dances around. So my answer to that question is, you want to trade in conditions that are normal conditions, But at the same time, volatility is good for us as day traders because it allows us to make a lot of money quickly, okay? So therefore, like I said, if you get to your charts and your charts are not moving, this is what typically you should do, guys. If something looks a bit strange price action, market's not doing anything, it's going sideways, you should check your news anyway. But at that point, that's a slap in the back of your head to check the news and see what's going on. Check to see if there are bank holidays. Check to see if there's some big red folder news coming out. Then you're going to go, oh, it's an American bank holiday. That means all of the traders that are out here moving the markets are on a beach somewhere or they're in a barbecue somewhere, eating a little jerk. So, I get it. I understand now. There's no point in me getting involved in the market just moving sideways because I'm not going to achieve anything. So, that's showing you how much you need to also make sure you're fundamental, or you're at least glimpsing at what's happening, in the world every time you trade. So that's my answer. Would I trade it? Well, if I saw the market's getting active and it's gone into my zone and it's broken structure, I would. If it's moving, if the market's not moving, not doing anything, I wouldn't, because I don't want to just sit around of me going into £100 positive, £100 in drawdown, £150 positive for the whole day. I'm not interested. All right, that's my answer. But good question.
Thank you.
Right. You're welcome. All right, so what are we doing? What would we if we saw the market doing like this? Actually, let me put some numbers in so we can get a little poll. All right. Where's the other one? Here we go. So, are we buying the break out of this high. Let me make this a bit smaller. So are we buying the break? Actually, I should use my other little tool, shouldn't I? Let me start again, because this doesn't know it. Let's do this. Are we buying the breakout of this high? Question mark. Oh my days, killing me. Let me go one more time. All right, go one more time. Third time's a charm. There we go. Are we buying the breakout of this high? Question mark. Enter. No, not enter. Click. Good. We're done. Are we? Are we selling the close of this low? Yeah. Are we waiting for a retracement into this high? All right, let's go. What's the highest probability move here? Let's take some more. What are we doing?
Yeah, we're selling. We are selling the close of this low because it's already corrected. We had the indication at the top of the range, and we had a correction, and we're just waiting for close below, and then we're selling at that point.
And let me put something else in here. I don't know who agrees with Al. I don't know, you got to let me know who agrees with Al. I'm going to put in something in a different color, like this. I'm going to make that color. How can I change this color now? Come on. Let's go again. In fact, this is annoying me, that little box. Sorry, I thought it was really good. This is annoying me. Let's go here. I'm going to put A. And I'm going to put B. B. And I'm going to also put C. All right, so who agrees with Al or who disagrees? Who's got a different opinion? And also the second question is, where are we putting our stop loss? A, B, or C? So Al thinks we're gonna go down here. So I'm gonna put this as Al. Al's down here. Al thinks that we're selling this. Anybody else got any other opinions of what we may be doing?
I agree with Al. I believe we're selling as well.
And where do you want to place your stop loss? A, B, or C?
A high risk. So I will put my stop at A.
Okay. And why would you put your stop at A opposed to C or B? Let me know the reasons.
A is the safest. That's a more conservative trade.
Okay. So let me ask you another question then. I like this. If you place your stop at A, I'm going to be putting in fact, let me not do it like this. Let me do it like this. If you place your stop at A, where are you aiming for? This is a bit more of a techie question. Let's go over here. I'm going to do this. Where are you aiming for? Where is your, what's going on there? Oh, I know why. So where are you aiming for? And I can give you some numbers so we know. This guy's gonna be 4. This guy's gonna be 3. This guy's gonna be 2. And this guy's gonna be 1. And what I should have done is I should have moved it to the right. So where are you aiming for then? If you put your stop at A, where are you aiming for ideally, and why? And anyone can jump in and answer the question if you agree. If you disagree, jump in and tell me something else. All right.
I can't see the Oh, I can now. Yep, I'd be aiming for 4-3, securing in my profits then, and trying to see if it will run till 4. But I would be aiming for 3.
Okay. Interesting. So basically, your trade looks like this. Your trade looks like this. This is Jason's trade. Just stop above here. And his target here, which is a 1-to-1, but aiming over here. I'm just gonna give you that there. So 1-to-1.5. So that's Jason's trade. Okay. Anybody else? Al, you said you sparked off the decision that's where we're trading from. So, where would you put your stop loss and what are you aiming for?
Again, if I'm being aggressive, I put my stop loss at A. If I'm being conservative, I put my stop loss at C because there's an imbalance below, possibly, yeah? So it could come back up, take the liquidity, yeah, and then come back down.
Go again, sorry. If you was aggressive.
If I was aggressive, I'll put my stop loss at A. If I was conservative, I put my stop loss at C. Reason why I say I put my stop loss at C, because there's a potential imbalance above or fair value gap, depends on which. It's the same thing, but it depends on which one you want to say, but it's the same thing. Yeah.
And where are you aiming for then?
I'm aiming for number 3 or 4. 3, secure my profits, and then I'll move my stop just near 2. And if it goes to 4, great. But 3.
So which one are you taking 4? First? Sorry to cut you. Are you taking your aggressive one or your conservative one?
I'll take the aggressive. I'll take the aggressive A. Because the market is not broken the range. As you said, you use the trend lines as a guide. It's not broken that. So I'll take A as my stop loss, and I'll go down to a 3 or a 4. That's what I'll look to trade to.
Okay. Anybody else got any other opinions? Anybody else got any other opinions?
There is a more aggressive trade.
Go on. What's the more aggressive trade?
Placing your stop above B.
Placing your stop. So this here above B. Yeah.
And again, probably aiming for a 3, securing your profits in and hoping that it goes to 4.
Okay. Anybody else? Anybody else got any opinions? That means everybody kind of agrees. All right, look, so what I'm going to say is I agree. I definitely do agree. I mean, I was obviously just writing it on the fly. It wasn't the most difficult. What I would say is this, is that where you place your stop and what your target is has to depend on some sort of rules, okay? Those rules are going to be, in my opinion, can this trade at minimum get me a 1 to 2? Okay, so if I was to, this is why I asked Al, if I was to place my stop above C, I cannot be out here aiming for 2 or for 3. Why? Because that's going to be me risking £1 to make 58 pence. That's a stupid trade. Because over time, if you was to lose, you're not making enough for how much you're losing. You can't lose half of your trades there and be profitable. You'd lose. So you have to be able to take the trade based upon saying that there is at least going to be a 1 to 2 in that trade. Yeah, so that's why I'm not mad at people that place their stop at B. I'm not mad if you place your stop at A. However, you've got to be aiming for that 4th level. You've got to be aiming down here. Yeah. Now, realistically, the market's supposed to run past it. It's supposed to be trying to get to the other end of this yellow line. Yeah. Obviously, we haven't identified what time frame this is or anything like that. This is just a diagram. But realistically, that trade is supposed to, whether it wriggles its way or not, because we know that markets don't just go in the same direction. Maybe if it comes all the way down here, whether it decides it wants to come back up here with a little piece, and you're thinking, oh God, and then it comes back down here, and then it realistically, that trade is supposed to get down to the other side of the range. Now, not to the millimeter, okay, as we know. It's not to the millimeter, but to some sort of structure, maybe over here, which I'm just trying to squeeze it in, maybe over here, when we look left at the structure, sorry, I'm squeezing it in, that we see some amazing imbalance over here, okay, that market just had to close, that looked like a big draw on price, yeah? So therefore, I'll be like, yeah, I'm targeting for this imbalance. I think the market's going to get down to this imbalance. And when it gets down to 50% of that imbalance, I need to be thinking about closing my position, or at least watching it carefully to see whether the market's gonna go, what it's going to go and do. Am I making sense? You have, obviously, there's going to be data points, and that data point could mean, like I said here, there's a great imbalance in here, and it coincides with being at the bottom of the range. Yeah, and you're thinking to yourself, Jay, when the market gets down into this little level in here, bro, I'm going to be happy with that trade. And that trade for me, because I took it aggressively, or I took it above here, my A is now looking like a 1 to 3 on a safe tip, and on an aggressive tip, it's looking like a 1 to 5. Tremendous trade. If you want, when you get down there, you can move your stop, because maybe the market decides to keep running down there and going nuts. Yeah, so instead of just stopping yourself out, maybe what you do is you just go like that, and you move your stop right up the arse of it, mind my French, on the basis of like, you don't mind getting stopped out, so you move your stop like this. Because it might just have a reaction from in that imbalance, after it closes the imbalance, start coming back up, or it might just say, we ain't done. And now you go, okay, wow. You start doing this. Start securing even more in. So now that trade is looking like this. Woo! And you're like, oh my goodness, it's going, it's still going. Woo! Oh my goodness, what's happening? Yeah, but that is correct, because we saw an indication here, we saw a correction, we saw a continuation. The market's trading within this range. We want to get into this trade, we want to execute, we want to wait for these markets to close below a level and understand. Let me make something clear to you. If you take a trade at the point where this market just closes below this level, with our strategy, you must expect for the market to come back and put you back into red, or at least to break even. Why? Because the market's trading down within this new range here. Look, I'm going to make it a blue. No, I'm going to make it a pink color. The market is now trading within this range. And ultimately, you took that trade in the middle of the range. Yeah, in this example, ultimately, you took that trade. Have a look. Oh, it's not letting me. Let me pull it over. There we go. Ultimately, by executing here, even though you saw the indication correction continuation when it closed, you're kind of in the middle of the range. Hence the reason why I say, and you've heard me say a few times, when you get more advanced, oh, it's not going to let me show it. When you get more advanced, you're able to take that trade at the top of the retracement. Okay, so at the top of this retracement, right about here, you're able to get into that trade. As it comes up to the top after retracing, more than likely closing some sort of imbalance, and then you start seeing it indicate, correct, and continue, then you're taking the trade in more of a premium. Am I making sense? Am I making sense? Somebody say that they understand what I've just said there, or unless I've completely lost somebody.
Could you repeat that? You said you're taking the trade in more of a premium
course.
or more of a discount?
More of a
But I
premium.
mean, more of a premium to sell.
Yeah, that's right. So obviously from here, you can see an indication breaking this structure here. Indicated. Then it corrected. And if you wait for that closure below this level here, then ultimately you must be prepared for this market to possibly have a look, start pushing down to the other end of this range, and maybe it decides to come back up in here in its retracement. Let's put you in the red or back to zero before then breaking that low once again. Because ultimately, when you take that trade there, you're kind of in the middle of that range because you're waiting for a closure. I want to zoom in, but it's not allowing me to because I've drawn on it. You're taking it because you're waiting for the closure below that level there. You're kind of in the middle of that pink range. Now, if you're more advanced, because obviously we haven't identified what time frame this is. Just imagine this is the hour time frame or the 50-minute time frame. Yeah, if you're able to, when you see this price come in and making its retracement, you could drop down to your 5-minute time frame. Yeah. And in that green dot, after you've seen an imbalance close, after all you've seen is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And then it gets up to here and you start seeing a lower low, a lower high, and then a lower low, i.e. an indication, correction, continuation. You will be closer to this premium level. And therefore, that's always a better place to be taking a sell from. You want to always be selling from a premium. At this point here, when you take that trade here with your stop above this last high, you should not see this come back into the green, into the red. So this should just go, because ultimately it's going to break this structure. That's the whole point of it. And then when it comes back, it's unlikely it's coming all the way back up to the top, unless you're making a double top, which is possible, but it's not common. Yeah. There's no reason it should come back up to this green dot. So this is why you hear me say sometimes, like, guys, we're waiting for on a larger time frame indication, correction, continuation, but I'm already in and I got in up here because I got in maybe on a 5-minute time frame or smaller. Yeah, when I saw it come up, close the imbalance, maybe even turn around at 50% of this impulse, another confluence, and then start indicating, correcting, and continuing at that level there. So I know that worst case scenario, we're supposed to be getting down to equal lows. But realistically, we're supposed to break straight through those equal lows because we're making lower lows, lower highs. I'm expecting to see a lower low, mate. So I'm expecting to see. And then afterwards, then we'll see another lower high, and then another lower low, and then another lower high. Obviously, that's textbook. Yeah, sometimes we see some consolidation for a little while. Sometimes we might see it wick up or wick down, but that's it in a textbook. So yeah, very good. All of the entries were correct. They were all fine. And like I said to you, if you understand what I mean by, remember, there is no time frame to this. So if this was in the hour time, right now, watch this. We go to a GBP USD hour. We're quickly going to do this, guys. I'm just running over a little bit, but this is good education. All right. Right, well, it's not right now in this present time in this hour. Look, we've seen, and like I said, this is better because you can see everything's not textbook. Higher high, higher low, higher high, higher low, higher high. Ever so slight higher low. And the market's now going sideways. It's trading within, as I mentioned, that orange box. Okay. Now, for argument's sake, if we see, let me make that white. If we see an indication, especially if it's from the top of the range, so there's a reason why we think it should be turning around, indication. And then we see a correction, especially if that comes up to 50% of the range and we start seeing it doing something. We have the ability to drop our time frame down from our hour down to 15 or even 5 minutes and get actually, let me do the structure this way, and then get an entry as the market indicates, corrects, and continues. Yeah, because then if that's the new range that the market is trading within, watch this, like this, and then like this, that's the new range that this market is trading within as it pushes down. But then us getting an entry up here, we got, you know, a nice entry in the premium section of that range. Whereas if this angle, and we waited for a closure below here, okay, the market came all the way down there, waited for a closure below here, then there is a very high possibility that if we got an entry here, yeah, we've got a lovely closure here on the hour time frame. If this market doesn't choose to accelerate in the direction it's going, and we placed our stop above here, keeping ourselves safe, then there's a very high probability that the market's going to start going into profits. Yes, everything's going good. And then decide it wants to come back here, touch the top of this range. All this would be us in the red until it touched the top of that range, and then decides to come back here, break our entry where we got in, and put us in more profits. Am I making sense? Does that make sense what I've just said? Because we see we've waited for a closure below here. So that means the strategy is correct. But based upon how the velocity or the angle of this coming down bearishly, it might just decide it wants to touch this pink line here and decide to come back up. It is going down. You are correct, but you're going to have to sit your ass in drawdown until it decides to turn around again. Your stop will be safe up here. But if somehow we was able to get an entry near the top of where the market decided to turn around, that would be near this premium area up here. Yeah? And that would be a more favorable entry. You shouldn't see yourself really get back into drawdown. Because by the time this comes back up here, look, your entry is up here, you're still in the green. Yeah? And to be perfectly honest, if you wanted to, depending on your profits, you could have taken your profits down here when it touches the other end of the range. If you got in up here, you can say, you know what, I don't want to sit in this retracement. You know it's going to retrace because the market's moved within waves. I don't want to sit here and take my profits. Or you say, you know what, cool, I don't care. I'm aiming for down here. If you're aiming for down here, well, you're going to have to sit in this retracement, is what it is. Does that make sense, guys? Does that make sense at all? Hopefully it does to someone.
It does, yes.
Good. All right. So remember, you're always in an ideal scenario trying to take sells from the most premium place of any range. Yeah. And if you don't, because you've realized that for whatever reason, you waited for a structure break here, and then when you started making a little range of how the market's coming down, you realize that you're either in the middle of the range or you're a little bit low on the range, then you know where your stop must go. Your stop can't be on some aggressive entry down here. Because realistically, you take your stop with some aggressive entry down here. Look, the market taps the bottom of the range, goes all the way back up here, stops you out, taps up in here, and then keeps going. How many times have you done that? Taking a trade and the market goes and stops you out here and then goes and taps and then keeps going down here. It's because you didn't get in the premium. That's why. You kind of got in the middle or low in the range, even though you was waiting for a closure below the low. That will dictate where you're gonna place your stop. So you'll be like, oh, I wish I could get in here for 5 pips, but you know what? I'm gonna have to place my stop over here for 20 because of where I'm getting in from. Yeah. Now, if for argument's sake, have a look at this, watch. This didn't make a retracement all the way back up in here. It actually retraced over here. Look, have a look. I'm giving you some sauce. Don't say I'm not giving you sauce. Dripping. The sauce dripping off the plate right now. Yeah. If this, for argument's sake, turned around over here. All right. Here, sorry, I'm just trying to pulling it down. Turn around here and close down below over here at this little point here, this little green dot here. Now, this angle now looks like this. Have a look. So based upon the range, I'm thinking to myself, it's a real big possibility that that market, where I enter, is kind of in a premium up here in this green dot, and I've got the ability for this market to actually get down to here. So me taking that trade here with my stop above this level, I am kind of in that premium area. Yeah, but not all breakouts happen like that. Some happen at a more, obtuse angle and want to come all the way back and put you into deeper drawdown. You see? I hope that we've learned something. There's a little something extra that I just revealed there. Someone picked it up and someone's like, oh, that's why when I keep getting these trades, waiting for the indication, correction, continuation, the market still kicks back up and stops me out later on in the day.
Can I summarize what I get from that? And I've noticed you've been introducing it recently. It's redrawing your range while you're live, because sometimes you get lost in where you're at in the trade. So I think that's a discipline that I definitely need to include in my trading.
Very, very good thing you just said there. You must keep redrawing your range. This is the best way for me to describe it too. You are only redrawing your range because you've got new information. You see, when this trade was coming up here, this is how my range was. My range was like this, yeah? But if this decided to push all the way, oops, if this little line, this little zigzag thing in here decided to push all the way up like this, yeah, and then decide it wants to start coming down and breaking structure like this, I cannot keep this yellow line like this. I've got to say, I've got new information now, and the range is now like this. Therefore, this bottom end can't be like this. Not in my books. My bottom end is now looking like this. Because I got new info. I didn't know that information before. So I can't draw with what I don't know. But when I see something change, I have to change. It's when the data presents, who knows why the data, why, who knows why now it's decided to break outside of that little range and do something. I don't know. But yes, you must keep redrawing your range as you get new information. Because now you're looking at features of, and why should you do that? Just back test it and draw some ranges and see how the market respects boing, 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 boing in between a range. So if you get new information that's changing the angle, change your RAS angle. And if again it goes and it breaks it and gives you a different information, change it again. Like you remember when you're changing, drawing these lines, you're not taking the trade because you drew the lines. Even when you change the line, I'm still waiting for this to get up here and see an indication, correction, continuation. So even just by me changing my line doesn't mean that, oh no, now you're doing this, now you do. No, you're still looking for what you look for. It's just giving you another place of interest to be extra vigilant. When I change my line like this, and this market gets down here to this yellow line now, I'm going to be thinking to myself, now might be the time. Now might be the time that we're going to get a retracement. And then if I see this market give me what I'm looking for, indication, correction, continuation after closing this imbalance, I'll be like, yeah, I'm hitting the button. Because I can see that these data points between here and here, correlated to this data point here, has given a place over here where this market might turn around. And why do I trust in that? Why do I believe that that might happen? Because I've seen it happen time and time and time again in the past. That the markets trade, like sometimes with pinpoint millimeter accuracy to these ranges that we draw. All right, so yes, 100%. And you have seen me introducing it. When you get new information, you must change the range. You're trying to get where that general energy is of the world, where the market's moving. And I like to take, sometimes if it looks a bit mad, I will take the tips of the wicks. But sometimes if I will also, if I'm seeing lots of bodies and other action, I'll draw another range in there as well. Not because I'm confused, it's because I'm just saying that there's this point of interest on this line, but there's also this point of interest because I've seen a lot of stuff happening on this line. I'm just giving myself a little help. Like going wink, wink, like possibly you should look now. Possibly now might be the time. And if I don't see it when it goes into that level and touch that line or touch that area, the candles giving me indications, corrections, continuations, not tapping into a candlestick zone or an order block, not closing an imbalance. If I don't see it in those things, cool, I'm not going to hit the button based upon me just drawing some yellow lines on my screen. But it at least gave me something to look at. Sometimes I'll even place an alert on the line. I'll right click the line and place an alert on it to say when we get up here, maybe I'll move it a little bit closer so it doesn't ring late. So when we get up in here and we go through this line, alert me. Yeah, but yes, definitely, Jay, you must keep editing your ranges because things change. Like I remember I've given you the example of a boat. The boat was going in this trajectory, it's going up. When the boat has to turn around, it's a big old boat. The angle starts to change. Starts to change a bit as it's popping it in first gear, then reverse, and then first gear, then reverse. So at every stage, the angle was like this, but oh, it's no longer like that. It's going this direction. Oh, it's no longer like that. It's consolidating. Oh, it's no longer like that. We're breaking structure to the downside. Okay, it's no longer like that. It's rocking and rolling. And now this boat knows where it wants to go. It's turned around and now it's ready to go. Furthermore, it's accelerating. Yeah. But when it starts making this retracement, it might retrace back to that original line and say, in fact, let's just keep going to the Caribbean. So at each point, as this boat was doing something, it changed this angle again. So now this becomes that other color of me saying, okay, we're currently trading within this. When this lunatic gets removed from behind the wheel, who's accelerating in this direction like a maniac, maybe the other skipper wants to get back to that previous trajectory, like that previous pink line. And therefore, when I see that happen and I see a reaction, the bigger range becomes like that. And then when it gets down to that pink line again, and I see a reaction to it, I'm expecting it possibly getting back up to that pink range. If it surprises me, it does something else, I must change my range. I hope that helped. Yeah, I hope that helped. Guys, good morning. Amazing day. It's Friday. Go have an amazing day. If you've got the day off today, you're taking a long weekend off of work, then good for you. Okay. If you're grafting and it don't mean nothing, and you're gonna keep doing what you need to do. Good. Al, what you saying?
Yeah, bro. Yeah, just want to jump in quickly. Non-farm payroll is going to be wild today. I don't know if everyone's seen what's happened this week. You know, the Japanese have intervened about 4 times. Bit with billions of dollars. It seems to work. Yesterday, they intervened after hours on Wednesday. Yeah, about 9:30. Yeah, when the market was quiet. Yeah, with another billions of dollars. And they intervened again yesterday, as you can see, that this time it's worked. Also, the Fed, every single data point is going to be really, really important. Yeah, the Fed are under pressure to cut interest rates, and they're not going to do anything until the data tells them so. So, as I said on the group, I think Danny mentioned it, you know, what does this mean? It means every single data point, doesn't matter if it's high, low, high, medium, or low, is going to be very important to the Fed. Yeah, today's non-farm payroll is going to be really, really important. So there's going to be lots of volatility. So if you're not in anything, just watch the sides. Yeah. But if you're in, protect your positions. However, I'm staying out of this one, to be fair, because this one's going to be really wild today. I've got a feeling that the American economy might be slowing down slightly, but not slowing down enough for an interest rate cuts. Basically, the bottom line is this, yeah. If the jobs unemployment goes to 4%, the Fed will cut interest rates. Yeah, right. Okay, that is a fact. Yeah, you can hold me to it. Yeah, if unemployment in the USA goes to 4 or above 4%, the interest rates will get cut by the Fed. Yeah, same in the UK. You know, same principle applies. Okay, so just be careful. As I say, I reiterate, every data point is going to be really important to the Fed going forward. It's been like that for the past 2-3 years, to be fair. Any questions, anybody?
Oh, very, very interesting. I mean, can you explain, just give a little summary and not too deep in regards to why that interest rate going to 4% would lead to them, of the unemployment going to 4% would lead to a cut in interest rate?
Reason why, because it will be going to a recession. That is the reason why. When we go into a recession, you know, jobs are one of the first things to go. Yeah, the jobs market starts, unemployment gets higher and higher and higher. They have to cut interest rates because they've gone. It's about balance, and it's tipped the balance, right? So if people become unemployed, that's less money into the coffers for the government. That means that they have to, the Fed will have to look at it and think, we need to start cutting interest rates slowly. The jobs market is a massive barometer, or barometer, as one would say, to how an economy is running. Yeah, if the unemployment's high, the economy is not very good. If employment is high, the economy is going like a train, right? You've got to look at it as that. So that's why the jobs data, when there's numerous job data within the month, they're all important barometers. Yeah. So that is why, if unemployment starts ticking up and it goes to 4%, the Fed will cut interest rates, because the pressure would be on from all sides. You need to cut interest rates to take the pressure off companies. Yeah, because don't forget, if interest rates are high, it's high cost for companies, right? You got to look at all these fundamentals. Yeah, high cost for companies, high cost for the public, and I need to let go of people. The data points all add up. Yeah, right. So that is the reason why if unemployment goes too high, 4%, 4.2, 4.4, the Fed will cut interest rates to just lessen the pressure on companies. Yeah, they want companies to hire more people. That's more tax dollar for the governments and so on and so forth. Yeah, so that is the reason why. Any other questions? It's all links up. Everything links.
Amazing breakdown. Yeah, really good information there, because obviously sometimes you say things, I know maybe there's some people who don't feel confident enough or to just ask you, what do you mean by that? But we want to make sure that everyone here can stitch the dots together and understand how everything is linked. But yeah, very,
of course. No problem. Listen, anyone, if you if you don't want to ask, in a public view, just message me. I'll give you the answer to any of your questions. I've had others message me on a number of things. To be fair, I had someone message me this week about the what's going on with the Fed and the non-farm payroll, and I just explained what it is. So don't just feel free to message me. Not a problem. It all links up. Jobs are important. Yeah, it keeps the economy ticking. And if unemployment's high, it means mortgages don't get paid. It means, credit cards don't get paid, and so on and so forth. There is, it's like dominoes. It starts falling, So that is one of the most important and that's what they look for. And they thought, to be fair, the Fed were going to break with interest rates going high. They thought the Fed were going to break, the jobs market. However, job market has been resilient, but it's starting to show cracks at the moment. So, it's going to be really interesting today to see what happens at 1:30. All right.
Really, really powerful information, guys. We're going to watch something. It's quite interesting because this is the richest Black family in the world and how they made it. Yeah, in a channel called The Billionaire Chronicles. But I didn't think we was going to be on the call now. We have run on. But remember I said to you that there is EU employment rate news, and I thought to myself, maybe this one here would maybe move the markets. I thought it'd be off the call by now. So we're going to quickly just look back. We've got a minute left. And just to see quickly, I'm just going to split the screens and we'll see if we get any reaction in the markets such as EU, and whether we get any any movement in the DAX, okay, so I'm going to put over here, I'm going to put DAX over here. And we're just going to look. I'm not in any trades. DE30EUR, all right? This is Rwanda's DAX. And we're just going to see whether, we get any volatility coming in from the news information. I'm going to go down to a small time frame. This is the 1 minute on RJ30. And on the right-hand side, you can see GBP USD. And we're just going to see whether or not, we get any volatility coming in now, literally in the next 50 seconds. And let's see what happens. We still might not get too much happening as the market sits and waits for non-farm payroll. But then again, we shall see. All right, literally, let's see. We've got 40 seconds left, and then we can watch the video. And I wish you guys have an absolutely great Friday. The tail end of the education has been recorded. So if you want to watch it back of how I was breaking it down, telling you guys that even when you take the trade, you have to be quite mindful of the angle, the trajectory of how that market's going to move down. And because you always want to be selling in a premium or buying in a discount. All right. And even if you do happen to take a trade where you just seen a closure below a low, but that low is deep into the range, you have to put your stop at the top end. Right? That's telling you where to put your stop. It's not your opinion of aggressive trade or low risk. Let's have a look now right now. 1 minute to go. There you go. It's 10 o'clock. Let's have a look. We're watching. We're waiting. In fact, I should also pull up the information and see what it comes out as. Let's have a look. I'll try and pull it out real quick. I'll put it as a small window. It came out exactly what they thought it was. Have a look at that. 6.5% was the previous. The consensus was 6.5%. It's come out at 6.5%. Now, what does that mean? That means that there's been no surprises by that information. All right? That means that, if they've already priced in, if those big wigs are already priced in for it coming out at consensus, well, there's no surprises. So I'm not expecting any type of huge volatility right now. I'm expecting things to just sit around and do the hokey cokey until non-farm payroll. All right? But guys, good morning, good morning, good morning. God bless. I'm going to put on that video there. Looks really interesting. This is the richest black family in the world and how they made it. For the people that are at home watching it on YouTube, like, share, subscribe, all of the good stuff. Yeah.